The rules of accounting. When it comes to the rules of accounting, we have two types of rules. One is the traditional rules, wherein we classify the accounts based on real, personal, and nominal accounts categories. And the other, called the modern accounting rules, wherein we classify the accounts based on 5 categories instead of 3. The 5 categories being assets, liabilities, incomes, expenses, and lastly, capital. Now, this capital sometimes is part of liability, but that's okay because capital is nothing but internal liability, because that is the money due towards owner. When it comes to modern accounting rules, I believe, and thankfully even the NCERT believes, that it is more practical and suitable for recording the journal entries. Let us understand the rules as per the modern accounting system. Now, what we have to do here is, whenever we see an accounting transaction or a financial transaction, the first thing which we need to ask ourselves is, which of these 5 categories of accounts is getting affected by this particular transaction? As you may already be aware, we follow double entry system of accounting, wherein we say both the give and take aspects of a transaction are recorded in the books of accounts of a business. Meaning, let's say a bookseller sells you a book. Now, we are recording the transactions in the books of that bookseller. Now, what or how will he record? He has to record 2 aspects here. The 2 aspects being the sale of book as well as the money which he has received from you. So this is a financial transaction, no doubt, for the shopkeeper. Thing which we have to do here is identify which of those 5 classifications of accounts is getting affected in this case. Is it the asset, liability, income, expenditure, or the capital? When we say affected, we only mean whether that particular item is increasing to the business or decreasing to the business. For instance, in this example itself, the shopkeeper sold the book to you and received money from you. The 2 aspects from the point of view of the shopkeeper in this transaction would be, 1, the income. Why income is getting affected? Because he has sold the book to you. The whole point of purchasing the books was to sell it to the customers, and you are one such customer to him. And the moment he sold the book to you, his sales increased. Sales is nothing but increase in income. Likewise, there is something else also which is getting affected, that being the asset. How is asset getting affected in case of shopkeeper? Very simple. He sold the book to you and in return, he received the money from you. So that way, we have seen at least 2 elements getting affected in a single transaction. Now, this is the first thing which you need to do when you encounter an accounting or a financial transaction. The next thing which you have to do is apply the rules of that particular classification. For instance, in this case, which are the 2 elements getting affected? One is the asset, the other is income. Now, ascertain whether that particular asset is increasing to the business or decreasing to the business. Whether income is increasing to the business or decreasing to the business. When he sells the book to you, his income is obviously increasing. And when he receives the money from you, his asset is also obviously increasing. The next aspect would be to apply the specific rule and then debit or credit that particular item. Having understood all this as to why even rules are necessary, let us try to understand the rules of all these 5 categories. Firstly, assets. The asset rule says if there is any increase in asset, debit it, or in other words, write it on the left hand side. And if there is any decrease in asset, credit it. Next comes the liability rule. Liability rule is dead opposite to the asset rule, wherein they say if there is any increase in liability, credit it, that is, write on the right hand side. And if there is any decrease in liability, debit it, meaning write it on the left hand side. Next comes the income, which is very similar to liability, meaning increase in income should be credited and decrease in income should be debited. Then comes the expenses. If expense increases to the business, then debit it. And if expense decreases to the business, then credit it. You may have observed that expense and asset rules are one and the same. That means if asset or expense increases to the business, we will debit it. If asset or expenses decreases to the business, then we will credit it. Same thing with liability and income. Those two have same set of rules, wherein we say liability, if it increases, we should credit, and liability, if it decreases, it should be debited. Now, these are the modern accounting rules. And in the next video, we'll be looking into the application of these rules in journal entries.